Let's begin the show then by talking with Silicon Valley 5G chip startup EdgeQ. The company has recently raised close to $75 million to help fund their ramp up in production as they're looking to sell technology to customers. Let's connect with Vinay Ravuri, who is the CEO and founder at EdgeQ. Thank you so much for taking time out and joining in. So let's just talk about this latest fundraise and what exactly the game plan is with these funds down the line. Can you share with us any sort of a perspective as to what this would take the total valuations to?
Yes, we raised $75 million in our Series B funding. We're not disclosing the exact valuation, but I can certainly tell you that it is an up round, unlike most of the investments that are happening nowadays in the tech industry. It is, I could probably say we're not quite a unicorn yet. We're several $100 million and certainly less than $1 billion valuation.
So just walk us through the details of the fundraise in terms of the investors that have participated. What have been your previous rounds of fundraising that have taken place so far?
Yeah, so to date, we've raised, including the 75, it's a total of about $120 million of funding that we've gotten since the inception of the company, which was in 2018. Our original seed investors was then called DFJ. They've rebranded called Threshold, which is a Sandhill venture company. They've invested in companies like Tesla, SpaceX, companies like that in the past. We've in the latest round, we've had multiple global investor base added to our current existing investors. That include a couple of Singaporean investors, ST Engineering, EDBI. We've also added SDF, which is a sovereign fund from UAE. We've had a few other strategic investors as well. These are corporate investors that have been with us.
All right. So what exactly is this fundraise going to be used toward? If you could just give us a little bit more perspective. You're looking to ramp up your production. What is the expansion plan down the line? Will you look at further fundraises? Is that on the anvil?
Yeah, we are a semiconductor company, which is a very capital intensive business. Nowadays, to build a chip, it takes north of $100 million. Just to get a chip into production. So for that, you need to kind of have a long game in mind. But at this stage, after 5 years of being around, we do have a 5G chipset, 4G, 5G combined chipset that we call a base station on a chip. So we are pretty much in months away from being in production, which means that we are this year itself will generate revenue with it. We have customers, some disclosed, some undisclosed. So this funds will be used for ramping those customers into production. So think like support structure and SG&A in general, just marketing to newer customers so that we add more to our revenue in the coming years.
Vinay, just give us a sense, given that you are a 5G chip startup company, what is the competitive landscape looking like? How many players are there and where do you stand?
Yeah, no, it's a good question. In the 5G chipset space, there's actually not a lot of companies, so competition is limited. It's I can probably count on my one hand. Some names that come to mind are Qualcomm, is a well-known company, but mostly they're on the handset side. They're on the cell phone side. You've got the likes of Intel. You've got companies like that, but they generally are not a 5G company. I call them chip companies. 5G companies in the sense that they sell chips into this industry, but not specifically made for 5G. So yes, there are large companies, but they're not really focused around the infrastructure side as EdgeQ is. So we are sort of unique in that. That's one thing to keep in mind. Second is, it's generally very difficult to build cellular technologies. This is also why a lot of countries want to build their this know-how in their own countries, because Otherwise, you're sort of dependent on suppliers from outside. If you remember, Huawei was one of those companies that built that, and they were selling it around the world. But then over time, due to geopolitical issues, they've been banned in some countries. So this is a good space to be in, but it's also very difficult to be successful in the sense that you have to really understand this market and the engineering aspects. And we're sort of lucky having come from ex-Qualcomm, ex-Intel, ex-Broadcom, having done this a few times. So we have the right makeup to be successful here.
Yeah, so to just take the clock back and sort of start off when EdgeQ began its operations in about 2018, how exactly did it begin? You know, what did your tech expertise and that of the other founders really build into creating this company?
Yes, so in 2018, when 5G was, it wasn't quite a buzzword, it was barely talked about. We felt that there is a need for a newer type of chip company solely focused around 5G. And I was at Qualcomm, so we decided, a few of us, not knowing really what we're going to do specifically, so we kind of quit, but we knew that there's a need for a fresh thinking in this space. And that's kind of all we left with. And we started the company with background with all around software, hardware.
Fair enough. That's how the company began. But what about your revenue run rate currently? What did you clock in for the year gone by? Are you currently profitable? Are you EBITDA break even?
No, we're not profitable yet. As I was saying before, we will start generating revenue this year. We've had some revenue in the past, but it was more NRE type of revenue. The actual product revenue will happen this year. It'll likely be, we're projecting in let's say it's in the millions of dollars. We are not going to be cash flow positive this year. Certainly in the coming years, we will be. And as it is in semiconductor space, when the production happens, there's a hockey stick that happens because you sell a lot of chips because customers essentially deploy. Let's say next year or this year, they purchase a little bit ahead because they also have to make systems around it. And then the volume matters here, and there's a lot. The expectation is that there's a lot of volume. As a result, the revenue itself is a hockey stick. It's not one of those things you make, 1 million here, 2 million there. It's a much more meaningful uptick in revenue.
Okay, and how do you see your margins growing with lower costs down the line?
Yeah, we like to say that we're not, in silicon, it's people say you're selling sand, sort of, but it's not what we do. It is more value. So the margins although in the typical semiconductor industry, gross margins are in the 50-60%. That's considered good, but our expectations for this type of technology is far north of that. We expect it to be north of 60%, the gross margin. So the cost basis of it is, yes, it's important, but the margins are based on the algorithms and the software that goes with it and the value add features. As a result of all this, we do expect our margins to be very, very healthy.
So what's the game plan down the line? How do you see EdgeQ growing? Where is it that you would, envision the company, say, 5 years down the line?
Yeah, very good question. First thing, we have a very large development office in India, in Bangalore. In fact, majority of our development is there, chip development, algorithm work, all of it. And we do see us expanding quite a bit more engineering-wise in India as well in other geographies.
Okay, and give us a sense as to what you're looking at as the next breakthrough in tech, because clearly AI today seems to be the buzzword.
Yeah, that's an excellent question. I get asked that often. What's the next ChatGPT going to be? So look, I think certainly AI is going to be is going to disrupt a lot of things. I think the question is not so much that it'll disrupt, and that's the next big thing. It's that what industries and how is it going to disrupt it?
All right. Thanks so much then for taking time out and joining in. Good to know that that's going to be the next big disruption. And all the very best when it comes to EdgeQ.
Thank you.
All right, away from that discussion then, and discount broking company Upstocks is backed by Ratan Tata, remember, and the company has managed to break even in FY 22-23. We spoke today with the co-founder Rajiv Kumar, who said that they plan to end this fiscal with a 25 to 30% profit and plan to keep growing. Listen in.
We crossed 1,000 crore revenue this past fiscal. We've grown 40% in a market which was fairly flat. Nifty March 31st of 2023 versus March 31st of 2022. The index was pretty much flat, but we still managed to grow 40% due to the great platform that we built and the great team that we have. And we remain focused. We became profitable this year, which is just a long-term vision is to. At Upstocks is to just really build up retail equity participation. We think that the India growth story is one of the most fantastic growth stories of mankind, and it's a 25, 30-year journey for us.
And corrected there, 1,000 crores. Yes, that was the revenue. But tell me, what is the overall strategy, say for the next 3 to 5 years? And of course, the question on everyone's mind is, when are you going to IPO?
The strategy here is, if you look at, say, platforms in the U.S. like Charles Schwab and Fidelity or Vanguard, right? The U.S. economic growth story, just to give you some contrast here, is probably one of the most amazing growth stories in our existence, right? In 1990, if you invested $100 in the S&P 500, today it's worth over $2,000. And we think the Indian economic growth story is probably even more fantastic. So as India's GDP ascends and we become, one of the top 3 countries in the world, it's very imperative that the people of India and the retail masses benefit from this immense growth potential. And so as a platform, we believe that, being a tech-first, product-first, mobile-first platform is the future.
If I look at what your peers are indicating, whether it is Zerodha or Angel, one is listed, other one is not listed. We get, we get updates on a quarterly basis. They are talking about a decline in market share. They are talking about a slowdown in demat accounts. They are talking about markets coming down, retail traders going away. And that's the basic nature of the broking business. How come that's not been a challenge for you?
Look, I think markets are always cyclical, right? And we're always kind of linked to the way the index is doing, the overall broad market index is doing. Nifty remained flat this year, but it still fared much better than global peers. So again, we don't really focus so much on just short term. To us, it's a 30, 40, 50-year vision. The Fidelities and Schwabs of the world have been around for multiple decades. Fidelity's been around for 70, 75 years. They've helped 45 million households in America just participate in the great economic growth story. So we're trying to build a brand that really lasts, for a long time. And because we're profitable now, there is no, cash issue at all. There's just, it's just the vision just to build profitably and to build over time. So short-term vagaries will always be there, like any industry. We are cyclical in that sense. But the midterm, long-term positioning of the Indian growth story is just incredible, as you and I all believe. So that's the way we look at it. So this past year, I think because Nifty was a little bit flat, our space generally felt that pressure a little bit. We've been able to outgrow it a little bit because we focused on quality customers. We also have an amazing branding presence on platforms like IPL and ICC, which have really helped us scale from a branding perspective. So these are the things that we did differently, I believe.
Trend, what you see in your clientele, is it coming from small towns, large towns, the same folks are trading more? What is the trend for us, which could be a very broking stroke India-specific trend according to you?
So almost 85% of our customers now, new customers now, are all from tier 3 towns, tier 2, tier 3 towns, which is where the growth is going to come from, right? Equity participation in India today is still barely scratching 6%. In the US, it's over 50%. Even China enjoys over 20% retail equity participation. So we have so much headroom left, and as the Indian market grows, it's very important that we all play our part, right? And just helping people manage these savings and just direct them towards, high quality equity markets. high quality equity stocks. And that's what we try to do. And every day is what we focus on, essentially, when we come into work.
Some of the peers like Zerodha, for instance, they have acknowledged that there could be a bit of a tough FY24. Earnings could take a hit. So you're confident that looking at the long-term growth story, the kind of traction that you're seeing in tier 3 towns, etc., that this will not be impacted? Any projections that you can give us in terms of your revenue as well as profits?
See, we've generally been almost doubling revenue on average every year, and this past year was a little bit more tepid because the market itself didn't grow so much. That's a guidance for our way forward as well, I would say, And again, because we're profitable now, there's no really, no pressure for us to, do some crazy growth story or something like that.
Let's hear it out then from Junior Information and Technology Minister Rajiv Chandrasekhar, who says that growth demand for digital products is going up and that India is at the intersection of emerging trends. Listen in.
We have already announced that we are in the midst of formulating a Digital India Act. Digital India Act is going to be a successor act to the IT Act. And one of the important issues that the DIA will certainly address is harm. And therefore the reciprocal safety and trust issues relating to our users from any technology or any platform, including but not limited to AI. So don't be nervous. We are totally aware of what the issues are. We will certainly not allow any technology to be operating in India without the guardrails and which will in any way violate the safety and trust that our digital Nagriks are entitled to, and it is our responsibility to ensure that our digital Nagriks are safe and trusted.
Okay, moving on then, it's clearly the time for startup and valuation markdowns in the startup universe. The latest one being US-based investor Janus Henderson, which has marked the valuation of online pharmacy unicorn that's FarmEasy by nearly half to $2.8 billion. Let's take it across then to my colleague Sharad, who joins in with the latest. Sharad?
Well, yes, we're looking at it. Our API FarmEasy parent company has actually seen 2 markdowns coming in the space of 1 week itself. And if you see over here, the valuation markdown last week was 21% by Neuberg Berman, and then Janus Henderson comes in during the weekend with a 50% cut. Now, do remember, this online pharmacy has seen an important valuation markdown happening. And the important thing is, of course, the impact of sluggish macro is impacting the entire startup world, and also the cost-cutting measures in order to become the road to profitability. That also kicks in for the companies. Now, there is a sliver of hope over here, and of course, the reports are coming in that the company has reported its first EBITDA profit in the month of April. The amount is small, it's around 14 odd crore rupees, but the company is expecting an annualized revenue of 7,200 crore rupees in the year FY24 itself, and the company plans to actually cross-sell more services going ahead. And there are reports also of almost a 50 to 100 million fundraise as well. Now, apart from this, we have seen a lot of markdowns coming in, and do remember, this is not from the companies but from the PE investors, and big names are there over here. Ola, Swiggy saw a markdown between 35 to 49%, while a bigger markdown coming in by Byju's and Pine Labs, by Prosus and Neuberg Berman.
Thanks very much, Sharad, for those details. Let's shift gears then and hear it out from Abhijit Mazumder. He's CIO at TCS. My colleague Sumita Kareer caught up with him. He talks about the company developing something as sophisticated and advanced as the uber-popular ChatGPT, as well as tech intervention. Is that going to lead to jobs becoming obsolete? And can AI eventually become more intelligent than humans? Hear him out.
You know, Abhijit, till now, conversations and interest around AI has been limited mostly to research papers and, of course, science fiction movies. But for an organization like TCS to actually develop a ChatGPT-type tool for its clientele is nothing short of revolutionary. So where will this technology be deployed? What are all its use cases? And by when will it be ready?
I think, there are multiple parts of your question. So let me see if I can answer them in sequence. First of all, TCS has been investing in building AI algorithms for a very long period of time. Over the period of time, we have matured what we are doing. Right now, since ChatGPT came out, AI has become a more household name. But for us, it's a technology that we have been investing for a very significant period of time. There are many ways we see AI will impact the industry, IT industry in particular. Definitely things that we do for our customers, the services we deliver to them, we are going to augment it. In banking and financial services, for example, fraud detection, price prediction, portfolio management. In media and entertainment space, we can look at generative AI to do a number of things like movie restorations, automated translation in real time, things like that.
So from what I understand right now, it's in development stages, so pretty early and premature to ask you, but then I have to. What are the kind of investments that are going into developing this chatbot? Secondly, what is the ROI that you're expecting from this? And is there any timeline that you can give on when will it be rolled out for your clients?
So, it's an emerging process. Right now, I do not have a timeline for you, but it would be sooner rather than later.
So everybody is talking about how AI is going to lead to a lot of jobs getting lost, and newer jobs as well will be created. And I think that's what happened with enterprise software that re-engineered corporations 30 years back. So what's your take on these new set of jobs that will be created? Prompt engineers, I know, is one such category.
Prompt engineer is definitely one of the categories, but it's not the only category. The opportunity for us is manifold in creating new types of jobs. It is difficult for me to predict all the different types, but let me put it this way. There are a number of things that we cannot do in a limited time that we have to solve a problem. Leveraging this AI, we would be able to solve problems faster, and in many cases in much more real-time basis. Let's take an example of let's say we are covering an event in a media space, and you need to provide some coverage of it in different languages, right? In real time, creating multiple different language translations for that particular event, coverage of that particular event. Today is simply not feasible because it's extremely expensive. It depends on human endeavor, and generative AI can help us do it almost in real time, right? And how do we configure such a solution? How do we enable generative AI to do it? That would be the new job that will come up. Whereas today's translator will probably move to doing that kind of a job.
So in the recent earnings of all IT majors, and this is not just specifically related to TCS, but across the IT spectrum, the interest in AI is really, really something that was unmissable. And everybody is interested in utilizing AI to sort of create efficiencies, to create revenue streams for their clients. But I have to ask you this. One of the critical issues that is being currently discussed is that perhaps the IT sector is a tad late to the AI party. Would you agree with that?
I don't think, we are late to the party. As I said, we have been working with AI for a very long period of time, and I'm sure that, different parts of, different participants in the IT industry have themselves been investing, in AI in different form. We have all been trying to figure out how to use it and how to use it and how to deploy it to solve problems. Emergence of the current set of technologies is fast tracking that. That's the way I would like to put it.
One final question before we actually let you leave. This is on regulatory concerns. Ethical concerns, of course, we'll speak some other day, but regulatory concerns. A lot of scientists, engineers have spoken about AI getting sentient, and I think this happened with one of the tech brands as well when AI actually developed emotions. And another factor is the fact that, it's becoming more intelligent than humans and it's a danger to humanity. Please weigh in on this discussion, and where do you stand on this, and what kind of regulations should be brought in to sort of make sure that AI is used for good and it becomes a force for good?
See, I think, any technology that impacts society as a large, governments have a role to play in it. There are positive aspects of every technology, but every technology deployment brings its own challenges. New skills need to be developed. Things that were not possible earlier may be now possible. And that may impact society both positively as well as negatively. Therefore, we collectively, as a stakeholder in the society, have to work with all the other stakeholders to see what is the right way to shape this technology, the usage of this technology as we go forward. We are all concerned about, for example, data privacy, right? So, how do we ensure that AI does not create further challenges with data privacy? That's one of the way to look at it. The other thing is, the technologies like generative AI depends on inputs that have been provided to it. And therefore, how much should we trust the output that is coming out of it? How do we even verify if what the technology is telling us is correct or not? We need to create certain guardrails so that we leverage the benefits and we also address the challenges it might cause. So from that perspective, collectively, we have to work together to ensure that we are realizing the benefits of this technology.
And that's all the time we have on this edition of Startup Central. Thanks so much for watching. Catch you same time tomorrow. Do remember, you can send in any feedback, comments or queries that you may have on suc@etnow.tv or simply on my Twitter handle. Goodbye.